So last week, Prime Minister Mark Carney announced that he will be waiving the GST on all homes up to $1 million for first-time buyers. The conservatives, Pierre Poilievre, had a similar proposal, but a little bit different. He proposed to eliminate the GST for all buyers, not just first-time buyers. The challenge with this, at least from my perspective, is that when we look at big markets like Toronto, a lot of our new housing stock is being bought by investors. So the question I have is, and I think we want to unpack today, is that should Canada be giving investors a tax break effectively to buy up even more of our homes? Some experts think yes. I tend to think no, but we're going to unpack that on today's episode. My name is John Pisalis. My team and I help buyers and sellers throughout the Toronto area make smarter real estate decisions. As always, if you have any questions for me or would like to meet with me and my team, you can just click the link in the show notes below or shoot me an email at askjohn@movesmartly.com. Now, before we unpack this tax break idea, it's important to really think about what is motivating this. And the motivation why governments are looking at removing tax on housing is because the new housing market is pretty much frozen. I mean, very few people are buying new homes. And I think before we kind of dig into these announcements, it's important to hit pause to think about why is it frozen? Now, if you listen to housing economists and housing activists, the common narrative they're going to tell you is that the new housing market is frozen because of high taxes. Governments are taxing homes too much of a high rate, and this is really the reason why no one's buying homes. Now, this is, I mean, a slightly delusional argument. GST has existed on homes for a very long time. And even when we look at development charges, which are the taxes that municipalities charge, yeah, they've gone up, but they haven't gone up that much from when the condo market was booming for pre-construction and 2-3 years ago to today. Maybe they've gone up 20, 30,000. And that is not the difference between the market booming and the market crashing, which is what's going on now. So there's something more at play. And as I've talked about on previous episodes, the real reason the condo market's tanking is not because of taxes. It is because Toronto's condo market was effectively a speculative bubble. The prices that investors were paying 2 or 3 years ago were completely irrational, or 4 years ago even, disconnected from reality. People were paying $1,800 a square foot for a pre-construction condo when existing similar units were selling for $1,200. They were just expecting these things to be these cash cows, this easy money that's just going to pay off. They're going to flip it before closing. Everyone was speculating in condominiums. And we're seeing that today. You know, when I've talked about in this report, how a lot in this show, how a lot of these new condos that are completing today are not worth what the investors paid for them. And they're getting banks to basically bail them out with blanket appraisals. So the reason the condo market has frozen is because during the speculative boom, prices were set by the speculative expectations of investors. And let's just say, you know, that average price per square foot downtown by investors was $1,500 or $1,600 a square foot. Well, today, nobody wants to pay that price. The average rational person doesn't want to pay that. But the builders have priced their whole projects. The price they paid, the amount they paid for land is based on the expectation that they're going to sell at that price. And because no one wants to buy at that price, the condo market's frozen. So really what's happening is there's a disconnect between what the builders needs to get as a sale price and what the consumer is willing to pay. Of course, this is a natural side effect of a housing bubble. I mean, you fuel up prices, you fuel speculation, the bubble crashes. I mean, sales freeze. That's kind of normal. I think the one challenge is that all of these housing economists and housing advocates that were big advocates of investors driving our market, effectively fueling speculation, sort of the free market pundits, are now, once the markets collapse, advocating for government intervention. Basically, when you remove taxes, and what they're trying to do is remove taxes so that the builders can cut the price to stimulate more sales. I mean, this is a government tax subsidy, right? So the pundits, the free market advocates, now that their speculative bubble has burst, they're trying to find other ways to encourage more construction. And of course, they're leaning on the government to subsidize the condominium market. I mean, my feeling is probably we shouldn't have had a bubble, but and I think before we talk about the challenges and where we are now, I think it's important to hit pause and talk about why. I mean, for years, I have not been an advocate of Canada's approach to building housing, which is this real big dependence on investors buying our new homes. And I think it's important to unpack why, because we're seeing it now. And then we'll kind of talk about sort of the approach that Canada is taking. Now, there's a few reasons why an investor-driven market isn't great. I mean, there's sort of short-term trends and then longer-term structural trends. In the short term, of course, they bid prices up. The average, you hear a lot of builders, you hear a lot of housing advocates like, no, families don't want to buy condos. Give me a break. It's not that families don't want to buy pre-construction condos. It's that they're not willing to pay the irrational prices that investors were paying during the boom. The average rational person is not going to go out and pay $1,500 a square foot for a pre-construction condo when they can get existing similar one across the street for $1,000 a square foot. That's not rational. And this is, again, this is a byproduct of when speculators drive the market and they push prices higher than they should be. So they lead to speculative bubbles. Now, some countries, I mean, I did some work in Dubai quite a few years ago. They have measures to curb speculation because they had a bubble during the US financial crisis and they realized that this isn't good. So they have measures that basically taxes that work as a disincentive to discourage speculation. Canada doesn't do that. Canada thinks speculation is apparently very good. Bubbles are fine because we need to let the free market do whatever it wants to do with our condo market. And of course, when it bursts and things don't go the way they want, they ask the government to bail them out and give tax subsidies. So these are the short-term dynamics and sort of the short-term reasons why an investor-fueled, driven, dominant new housing market isn't good. But there are two longer term reasons why I think these are issues. Number one is one thing that we're seeing. New families are getting cut out of owning a home of their own. More of our stock, and in particular new housing stock, is being bought by investors who have a ton more capital. It can buy loads of houses. Our former housing minister, Ahmed Hussein's loading up on townhomes in Ottawa. So we have first-time buyers competing with politicians, competing with older, wealthier generation who have tons of capital and are buying investment properties, so younger people can't get in. Now, sure, this is a byproduct of Canada's political and banking system. We prioritize investments in houses, but again, we have to keep in mind that when you prioritize that, our governments and the housing advocates and economists are making a decision to also shut out the next generation of owning a home of their own. Okay, so that is implied in their advocacy of investors. The second thing that is happening is that when our banking system and our political system advocates investors hoarding houses, which is basically what's going on, and encourages banks to lend to people who want to buy houses rather than grow their business, our productivity plummets, right? There was a chart last week showing the GDP growth per capita across the entire OECD, and Canada was second worst, basically, which basically means because, I mean, part of this is our population, but part of this is just Canada is not investing in businesses. We're not encouraging people to invest, make productive investments. Canada encourages people and businesses to make unproductive, extractive investments that is just basically sitting on homes. These are investments that extract value rather than create value. And this is a big reason why our productivity is plummeting, because our governments have made sitting on and buying homes the easiest, most lucrative investment possible. There's no incentive to invest and make productive investments. People don't want to do it. Banks don't want to do it. So these are sort of some of the broader reasons. I'm going to release a video in the next few weeks that unpacks this in more detail. But again, I think this is the wrong path as a nation. Obviously, these are two big negative side effects. But again, this is the path that uh, Canada's government, at least up until now, has been advocating, and what most housing economists have been advocating. Now, going back to the question of sort of GST on homes, should our government and Pierre Poilievre's plan is to move the GST on all new homes up to 1 million. Mark Carney says just first-time buyers. Which path is better? Now, most housing advocates and housing economists are pushing for Pierre Poilievre's plan. They think it should be removed on all houses. But again, these are the same housing advocates who are fine having investors buy up most of our housing stock. They're the same housing advocates that encouraged the speculative bubble that's leading to the collapse today. And again, I don't agree with this approach. I don't think selling off our housing stock to an increasing number of investors, shutting the next generation out of home ownership, creating a generation of renters is the solution to our housing crisis. The housing economists tend to think this is the path we should be going on. Most housing, pundits and economists think this is the way. Our government so far has been pushing this way. I don't think this is the path forward. And at the end of the day, when you're cutting taxes and the biggest buyers are investors, you're effectively giving a tax subsidy to the very investors that created and caused Canada's housing bubble or pre-construction condo bubble. And I think that's backwards. It is like basically saying, we get you people caused this speculative boom, push prices higher than they should be. You know what? We're going to cut taxes so you can go back and do the exact same thing. To me, this is insane thinking. Yet this is the thinking from Canada's leading housing economists, that we should fuel more speculation, pump the housing market with more investor demand, sell off our housing stock, and governments should subsidize this speculation because we think it's just going to create more supply. And who cares who buys it? Who cares if they're 300 square foot condos? More supply is the solution. And this is what the economists, what the experts have been advocating. Again, they have a different vision for Canada. That's not my vision. So I tend to agree more with Carney's approach, which is to give this tax subsidy to Canadian families, to people who are buying their first home. Give them, what happens is a couple of things. Number one, you give younger first-time buyers an advantage, a financial advantage over the investors who now still have to pay GST. And in a market where new housing is driven by investors, I think it's a good thing to give a tax break to first-time buyers. I don't think it's a good thing to give a tax break to the very speculators who caused this crisis. So I think giving the tax break to first-time buyers is the better approach. Whether Carney does it or not is a separate issue. I tend not to believe most politicians, so this is not necessarily an endorsement, but I think that strategy is better. Now, some builders and some housing pundits will say, what about downsizers? I'm being ageist. I'm discriminating against seniors. I mean, these are all nonsense arguments, and they're nonsense. And again, this is really just driven by the building industry for one main reason. Number one, a first-time buyer, a first-time buyer is a first-time buyer the day they buy the home, because you can prove that. They have to disclose that. It's a fact that they are going to be first-time buyers. So it's not something you can make up. If they already own a home, they're not a first-time buyer. Downsizers, everyone can be a downsizer. Every speculator buying 8 condos is going to downsize to each and every one of them. So when you make the requirements so broad, you're basically saying everybody. So first-time buyers is the only test that can actually be proved before somebody buys. You cannot prove that someone is going to downsize or upsize or be an end user before they close on their transaction. So you're basically saying, let's make it open to everybody. So again, is it a perfect policy? No. I tend to think, even Carney's policy should not be on homes priced under $1 million. It should the exemption should be on the first $1 million, so that if someone in the Toronto area is buying a $1.1 or $1.2 million home, they still get that tax subsidy on the first $1 million. But again, I mean, who knows how this all plays out? Who knows what the policies actually look like? But again, when we think about policies, I tend to think policies that prioritize end users rather than investors is a better approach. But again, I'm curious to hear what everyone else thinks. Should Canada be subsidizing the very investors that fueled our housing bubble? Should we be giving them tax subsidies to buy more condos. I'm curious to hear your thoughts. Please post them in the comments below or shoot me an email at askjohn@moosemarley.com.